In today's financial market, it can be overwhelming trying to decide where to put your hard-earned money. To help you make informed decisions, we have compiled a list of 8 assets to invest in, and the best ones for you will depend on your financial goals, risk tolerance, and other factors. Also, we will give a risk grade from 1 to 10 for every asset. But as always, we will look at the history first in order to understand better the purpose of these assets. So join us as we explore the best 8 assets to invest in and get one step closer to financial success. But before we dive into the history of the assets and how you can use them to gain more wealth, hit the like and subscribe buttons as well as the bell icon and leave a comment down below and we will do our best to respond to you. The concept of a stock market dates back to ancient Rome, where the government would collect taxes in the form of shares in state-owned enterprises. However, the modern stock market as we know it today has its roots in the Dutch Republic of the 1600s, where the Dutch East India Company and other companies issued shares of stock to investors to raise capital. In the United States, the stock market has a long history dating back to the late 1700s. The first stock exchange in the United States, the Philadelphia Stock Exchange, was established in 1790. The New York Stock Exchange was founded in 1792, and it is now the largest stock exchange in the world. Over the centuries, the stock market has undergone many changes. In the 1800s, the stock market became more organized and regulated, with the creation of the Securities and Exchange Commission (SEC) in the 1930s. The stock market has also been impacted by historical events such as the Great Depression, the dot-com bubble, and the global financial crisis of 2007 to 2008. Today, the stock market is a key part of the global financial system, and it plays a vital role in helping companies raise capital and giving investors the opportunity to earn financial returns. You can buy shares of stock in publicly traded companies on the stock market. When you buy shares of stock, you become a shareholder in the company and you own a small piece of the company. You can also buy other financial instruments on the stock market, such as bonds, mutual funds, and exchange-traded funds, ETFs. These financial instruments can provide you with a way to diversify your investment portfolio and manage risk. The stock, also known as a share or equity, represents a unit of ownership in a company. When a company wants to raise money, it can issue shares of stock to the public in an initial public offering, or IPO. The value of a stock is determined by the supply and demand for it on the stock market. If more people want to buy a stock than sell it, the price of the stock will go up. If more people want to sell a stock than buy it, the price will go down. The price of a stock can also be influenced by the performance of the company and the overall state of the economy. Stockholders are entitled to a share of the profits of the company, and they may also be entitled to vote on certain matters related to the company's operations. However, stockholders also bear the risk that the company may not perform well and the value of their stock may decline. On a scale from 1 to 10, our grade is 3 for stocks. They have a potential risk if you choose to invest in smaller companies that are new in the market, but a high reward if everything plays out. As always, you must do your own research until you choose to buy any piece of stock. Exchange-traded funds, ETFs, were first introduced in the early 1990s. The first ETF, the S&P 500 ETF, also known as the SPDR, was launched on the American Stock Exchange in 1993. It was designed to track the performance of the S&P 500 index, which is a benchmark index that consists of 500 of the largest publicly traded companies in the United States. Since the launch of the SPDR, ETFs have become increasingly popular with investors due to their low costs, convenience, and diversification benefits. Today, there are thousands of ETFs available that track a wide range of market indices and invest in a variety of securities, including stocks, bonds, commodities, and more. An ETF can be traded on stock exchanges like individual stocks, and they can be bought and sold throughout the day. The price of an ETF is based on the value of the securities it holds, and it can fluctuate based on supply and demand, and they are popular with individual investors, but they are also used by financial advisors, hedge funds, and other institutional investors. On a scale from 1 to 10, our grade is 2 for ETFs. They have a lower risk because, as stated before, an ETF is a group of companies or assets, and the money is spread between them, and which makes the investment more secure. The concept of mutual funds dates back to the late 1800s when a Massachusetts lawyer named Edward Johnson II founded the first modern mutual fund. It was called the Massachusetts Investors Trust, and it allowed individual investors to pool their money together and invest in a diversified portfolio of stocks. Since the creation of the Massachusetts Investors Trust, mutual funds have become a popular way for investors to access a diverse range of securities and professional management in a single investment. Today, there are thousands of mutual funds available, and they come in a variety of types, including stock funds, bond funds, money market funds, and more. Mutual funds are regulated by the Securities and Exchange Commission (SEC) in the United States, and they are required to disclose their holdings and other important information to investors on a regular basis. A mutual fund is a type of investment vehicle that pools together money from many investors and uses that money to buy a diversified portfolio of stocks, bonds, or other securities. Mutual funds are managed by professional money managers who use the pooled money to create a diversified portfolio that is designed to meet the investment objectives of the fund. One of the main advantages of mutual funds is that they offer investors a way to diversify their portfolio with a single investment. Because mutual funds hold a diverse range of securities, they can help to spread risk and reduce the impact of volatility on an investment portfolio. Mutual funds are also convenient for investors because they are managed by professionals, which means that investors do not have to spend time researching and selecting individual stocks or bonds to invest in. Mutual funds can be actively or passively managed. Actively managed mutual funds try to outperform a particular market index, such as the S&P 500, by selecting individual securities and making investment decisions based on the fund manager's research and analysis. Passively managed mutual funds, also known as index funds, try to track the performance of a particular market index by holding a portfolio of securities that is representative of the index. On a scale from 1 to 10, our grade is 3 for mutual funds. The biggest risk of a mutual fund is when the leadership is not very wise and where the investments are not very smart. A bond is a financial instrument that represents a loan made by an investor to a borrower, typically corporate or governmental. The borrower agrees to pay periodic interest to the investor and to repay the principal when the bond matures. In other words, a bond is a way for a company or government to borrow money from investors for a set period of time at a fixed interest rate. The concept of borrowing and lending money can be traced back to ancient civilizations, but the modern form of bonds has its roots in medieval Italy. The Catholic Church was one of the first institutions to issue bonds, using them to raise money to build churches, cathedrals, and other religious structures. Over time, the practice of issuing bonds spread to other organizations, including governments and businesses. Today, bonds are an important part of the global financial system and are widely used by governments, corporations, and other organizations to raise capital and finance their operations. There are many different types of bonds, including corporate bonds, municipal bonds, and government bonds, each with its own unique features and characteristics, but the difference between bonds is not included in today's topic. Many investors, especially those with a long-term investment horizon, will use bonds to diversify their portfolios and reduce the overall risk of their investments. On a scale from 1 to 10, our grade is 1.5 for bonds. If you choose to invest in government bonds, the risk is quite low. Check the link in the description if you want to find out more about bonds. A cryptocurrency is a digital asset designed to work as a medium of exchange that uses strong cryptography to secure financial transactions, control the creation of additional units, and verify the transfer of assets. Cryptocurrencies are classified as a subset of digital currencies and are also classified as a subset of alternative currencies and virtual currencies. The first cryptocurrency, Bitcoin, was created in 2009 by an individual or group of individuals using the pseudonym Satoshi Nakamoto. Bitcoin was designed to be a decentralized digital currency that would allow users to make transactions without the need for intermediaries such as banks. Bitcoin was created in response to the global financial crisis of 2008, which many people believed was caused by the irresponsible practices of financial institutions. Bitcoin and other cryptocurrencies use decentralized ledger technology known as the blockchain, which allows transactions to be recorded and verified on a public database. Since the creation of Bitcoin, hundreds of other cryptocurrencies have been developed. Some of these, like Ethereum, have gained widespread adoption and have even surpassed Bitcoin in terms of market capitalization. Cryptocurrencies have attracted a lot of attention in recent years due to their potential to disrupt traditional financial systems and the fluctuations in their prices. While they have the potential to revolutionize the way we think about money and financial transactions, they are also highly volatile and have been associated with illicit activities. As a result, they have been the subject of much regulatory scrutiny. Have you invested until now in the crypto market or in the stock market? Leave a comment down below and let us know what you bought and your best returns. On a scale from 1 to 10, our grade is 9 for crypto. They have a high risk because the volatility is high and the market is not fully regulated. There are many scams out there like Shiba Coin and Luna, and you know the story of FTX. So as always, make your own research until investing in crypto. Gold has a long and rich history as a valuable commodity. It has been revered by humans for thousands of years and has been used in a variety of ways, including as a medium of exchange, a store of value, and an object of art and jewelry. Also is thought to have been first mined in ancient Egypt and was used as a medium of exchange as early as 700 BC in ancient Rome. Gold was used to mint coins and was also used to make jewelry and other decorative objects. Throughout history, gold has been highly valued for its rarity and its ability to withstand corrosion. It's also a good conductor of electricity and is not easily tarnished, which makes it useful in a variety of applications. In more recent history, gold has played an important role in the global economy. The gold standard, in which the value of a country's currency was linked to a specific amount of gold, was widely used in the 19th and early 20th centuries. Today, gold is still considered a safe haven asset and is widely used as a hedge against economic uncertainty and inflation. There are several ways that investors can invest in gold. Investors can buy physical gold in the form of coins, bars, or jewelry. Physical gold can be stored at home or in a secure storage facility, such as a bank safe deposit box. Another method to invest in gold is through mutual funds and ETFs that hold gold as a primary asset. These funds are typically invested in gold mining companies or in physical gold. On a scale from 1 to 10, our grade is 5. It's important to be aware that investing in gold carries some risks. Gold prices can be volatile and may be affected by a variety of factors, such as changes in interest rates, economic conditions, and geopolitical events. You should carefully consider your investment objectives and risk tolerance before investing in gold. Real estate has been a popular investment for centuries, with some of the earliest recorded instances of real estate investing dating back to ancient civilizations. In the modern world, real estate investing has played a significant role in the economies of many countries, and it has been a way for people to grow their wealth and generate income. One of the earliest forms of real estate investing was the purchase of land for agricultural purposes. As cities and towns developed, people also began to invest in residential and commercial properties as a way to generate rental income. In the 19th and early 20th centuries, real estate investment trusts were introduced, which allowed people to invest in large-scale real estate projects such as shopping centers and office buildings without having to purchase the properties outright. Real estate is a type of property that consists of land, any buildings or structures on it. There are many different types of real estate, including residential, commercial, and industrial. Residential real estate refers to properties that are used as a place of residence, such as single-family homes, apartments, and townhouses. Commercial real estate includes properties that are used for business purposes, such as office buildings, retail stores, and shopping centers. Industrial real estate includes properties that are used for manufacturing, production, and other types of industrial activities. Real estate can be a good investment because it has the potential to generate income through rental payments, and it can also appreciate in value over time. However, investing in real estate also carries risks, such as the potential for changes in market conditions or natural disasters that can affect the value of the property. Today, there are many different ways to invest in real estate, including buying a rental property, purchasing shares of real estate investment trusts, or investing in a real estate crowdfunding platform. Real estate can be a lucrative investment, but it is important to carefully consider the potential risks and returns before making an investment. So our grade for real estate is 7. Because many economic situations could affect in a bad way the real estate market. Collectibles are items that are valued by collectors for their rarity, historical significance, or aesthetic appeal. They can be anything from stamps, coins, and sports memorabilia to dolls, figurines, and antiques. Collectibles are often purchased as an investment with the hope that they will appreciate in value over time. There is no one definition of what constitutes a collectible, as different people may have different interests and areas of expertise. Some collectors focus on a specific category, such as stamps, coins, or comics, while others may collect a wide range of items. There are several factors that can influence the value of collectibles, including the rarity and condition of the item, the demand for the item, and the historical significance of the item. Collectibles that are in good condition and rare are generally more valuable than those that are more common or in poor condition. It is important for collectors to be knowledgeable about the items they are collecting and to be aware of the risks involved in investing in collectibles. The value of collectibles can fluctuate significantly, and there is no guarantee that an item will appreciate in value over time. On a scale from 1 to 10, our grade is 8. The risk is very high because it's a subjective market open only to a few people. In order to acquire collectible assets, you need to know the industry. So our advice is to consult an expert if you want to access this world of high-value collectibles. In our opinion, these are the best assets that you can invest in. So if you want to know more about the history of assets in business, go and watch the following videos, and if they are available for you at the moment, it will pop up on your screen. If not, subscribe and press the bell icon to get notified when they will be uploaded. See you there, and thanks for watching.